Gold market, as I said, has been in danger of a breakdown. It's been weak, but it's been holding. It's gotten close to that 1848 level that we were looking at, but then began to move up. We're going to move off of this FEZ chart, and we're going to move into the gold market /GC. So this is the cycle analysis on gold. Yes, a busy chart. And this also has colored phasing in there, so that's why it looks so busy, is that it shows you the rising phases and the corrective phases in green and yellow. So I just want to look right over here where we are. Now, we are in this rising phase that you can see. Now, when you get into a nested period, you get the declines. All of these are correcting on the downside. And then you get into this rising period, and that's when you're supposed to get very significant upside moves. If I go back over here, you can see where all of this nesting was going on right over here, and that began this big upside move right at that point. That's just the way it works when you get the synchronicity of these markets beginning to move in one direction or the other. So we should be moving up pretty significantly based on this pattern where we are right now. Now, I already have a yellow zone in there, and that's because this low right in here has been testing these lows. And we did that a couple of times this week also, as well as having done this the last several weeks. It's been avoiding breaking, and you can see the 34-week moving average coming up here, which often is also a support area. And this is really key for the gold market. It's gotten closer. Momentum in the gold market, as you can see right over here, that's where the momentum turned negative. And while it's been trying to go up, it flattened out, but it's actually still just a tiny little bit negative. I'm not going to show you the daily charts because the daily charts are what we share in our Future Speak from now on. And we'll be taking this little bigger view 1 to 3 months in MarketWeek. And the daily charts are showing negative momentum and some pretty weak trading action when we look at there. Now, the silver market is better than this. It's not close to a breakdown. So we think that the weakness in gold might actually be giving a better opportunity to be buying some silver at some point, but this is a what we consider to be a dangerous pattern, and it needs to hold here. In order to get this to be anything that really looks like it can significantly be better, it needs to get above this level that I tried over here at about 1967. We talked about that level a lot, and it did try to get through there, but then it has been starting to struggle. And there's resistance right over here at about 1894, and more resistance here at about 1920. That's what comes from the daily chart. And if we can get above those levels, above that 1920, it would be kind of a warning that it's going to hold in here and not break down. Right now, you can see we're still in this upward projections right in here, but those will change. If you break down under here and you start to move lower under this support, then these will begin to point down over here. And we're looking at the dollar bottoming pretty soon and beginning to move up. And if that's the case, then gold is going to have just a hard time. So we have the caution flag out in this yellow zone that the gold market could be doing poorly fairly soon. It's rescued itself a couple times in here this week, and let's see if it can pull away from this zone on the upside and look better. I'd like to see that happen. I want to be bullish. And when you see Bitcoin up near threatening within $1,000 of its all-time high, you wonder, how could Bitcoin be so strong and at the same time the gold market languishing? Well, maybe that is the reason. Well, think about that. So that's a look at gold, which is giving warnings in here.